Despite the market's big decline in August, the S&P 500's long-term charts remain bullish. We're going to talk about all of these, and at the very end of the video, we'll show how far the S&P 500 can go from here. I'm Frank Cappelleri from CappThesis, where we help active investors identify the most important trends and trade setups all through charts and stats. So let's first start with the bad. And the bad is that this is a topping pattern. It's pretty clear, it's undeniable, and if you type in the term head and shoulders pattern to any investment website, technical analysis, textbook, so forth and so on, it's going to show a picture just like this. So head and shoulders is a reversal pattern and it's bearish. So it forms by, of course, having a preceding advance, pause for a bit, which is the left shoulder, then continue much higher, that eventually then reverses, which creates the head there. And then of course, the most recent failed rally produces a lower high, which should be the right shoulder. And so if this gets completed, it goes back below the most recent low there, then we have a live bearish pattern. So after that pattern is completed, then we can talk about what a possible downside target would look like. And we can do that just by employing what's called a measure move strategy. Just take the height of the pattern and then subtract it from the breakdown point here. And that would get us all the way down to 4,050, which would be about 12% move from the high, which is pretty substantial, right? A correction, generally understood as 10% lower, which we haven't had since the decline from last August to the low in October. And if you look back over the last few months into last December, we had two declines of 8% and 9%, right? So all the other ones in between that time from the March lows were pretty shallow, right? In between 3.5% and as low as 1.5%. So those were dips, but really didn't even register in this uptrend. So this would be pretty substantial. So the question is, does it break? And if it does, what does it mean? But before I get into the good charts, I would say that if you like this kind of content, give the video a like and subscribe. You'll be notified anytime we put out a new one. And we want to hear from you as well. In the comment section below, please tell us what you think the most important charts for the market is right now. So let's zoom out a bit here. And so this is the last 3 years of action, right? In a one big range. And at the bottom here is the RSI. So this is a weekly chart. So this is a 14-week RSI, relative strength index, basically just measures momentum. And so when you're in a trading range, you hear the term overbought a lot. Overbought means that things are getting overextended to the upside. And again, when it's happening inside of a sideways movement, that can signal reversal. Well, that type of overbought condition appears in an uptrend though, is actually positive. And we can see that's really what's happened here, starting with the breakout in November 2020, right? The RSI came back above and eventually got to overbought and really stayed with this trend all the way until the end of the year. And so over that time, what did the weekly RSI do? It oscillated between the midpoint around 50 and overbought all the way until things really changed after that big downturn in January 2022 is when the market character then morphed into a downtrend. And what happened to the RSI at that point? Well, obviously it went lower, it oversold a few times. Most importantly, on the ensuing intermittent rallies here, it failed at the 50, right? So 50 was a floor at first, now it became the ceiling. And that's really what confirmed this downtrend all along. And so we bottomed here, of course, but it took the RSI a little bit longer to right itself. So it was oscillating right in the middle point for a little while. And then as you finally got through the first quarter, when there's still volatility, got through the banking crisis, and things started to then start to look like more of an uptrend, right? You started seeing breakouts work, started seeing upside targets hit. That's when the momentum really shifted, started to confirm this uptrend a bit more. And so most recently, we had the pullback, right? S&P was down 6% or just about from its high so far in August. The RSI, not surprisingly, has come off overbought, but still above that mid-range, right? So still supportive of the move up to this point. So again, if we don't see a downside break for that pattern that we just talked about, then this RSI will continue to confirm the move. Here's a different way of looking at it. Now this is looking at the 14-day RSI, but we put on it a 50-day moving average to smooth it out a bit. So again, similar, but looking at it from a slightly different angle. And so going back here, we know from the COVID lows, it was a really strong reflexive rally. Things get started, but from that point, starting in March or starting in May and June, that uptrend started to stabilize a bit and get more mature, get more persistent. And we saw that here by how it adhered to the same uptrend line the entire time. And so what's interesting about this is that 50-day moving average, from the first time it actually crossed above the 60 zone, so on its way to overbought, but not quite yet, it stayed there all on the way. Even though the RSI was dipping, getting close to oversold on some of the pullbacks, it was able to then stay within that 60 range all the way up until the end of the rally, at the end of 2021, beginning of 2022. In fact, if we stayed in the trade, so to speak, the whole time, after the RSI first crossed 60, and then got out after it crossed below 50, it would have nailed the majority of this trade. And so from that point, again, we had to wait all the way until June of this year for that 50-day moving average of the 14-day RSI to get back above 60. So did not nail the low, right? But we got in as the market was readying itself, right, as the breakout started to occur. And so right now, about 2 months into it, remember that RSI on a smooth basis still around 60. So again, if we see this continue and wait until that RSI then dips below 50, help us stay in the trade longer as well. So question is, right, how far can this go? Well, here are the major uptrends going back over the last 10 years. And we can see that we're just about 10 months into this one, which if it stopped right now would be the shortest of the big uptrends. And we can go back to, you can even extend this one at the beginning of the 2011 low and draw all the way up to the middle of 2015, see how long that went. And we know about these other ones here. And so not quite as long as the last ones. There's actually one factor that still hasn't accomplished all the other ones did before they actually fell apart. Or I should say, before they actually retraced a bit. That is, it is yet to reclaim the most recent high. So again, we see all these other uptrends, right? They continued higher, broke out through a previous high, and then continued from there, right? So if you think about it, there's still a while to go to overtake the high from early January 2022. We can also have an additional advance from that point. So if you like this kind of video, there are a few others here to click on. So in addition to these long-term trends, we also talk about things from a more short-term perspective. There's shorts here, and there's also a few other videos as well to always check out. Talk to you soon. Thank you.